15 clever ways to pay for assisted living. Nowadays, Americans are living longer than ever before. According to the Census Bureau, at least 20% of the American population will be made up of people ages 65 and older by the year 2050. But the increase in the elderly population, especially those older than 85 and who require costly long-term care, has led to significant financial problems. If you're taking care of an elderly parent or relative, then you have an idea of what we're talking about. Good news! You don't always have to exhaust your savings to meet the expenses of home health care. There are several options for paying for assisted living. Among them, long-term care insurance. Long-term care insurance covers long-term care costs that are not covered by health insurance, Medicaid, or Medicare. If you already have long-term care insurance, your policy covers assisted living. If you have a policy designated for home care, it should automatically cover assisted living as well. Life insurance. How does this work? Well, you could cash out the policy. You can sell back the policy to your insurer at a loss. Most companies buy the policy back for 50 to 75% of its original value. The rules surrounding this procedure vary from one company to another. Some companies only agree to purchase the policies if the insured is terminally ill. In the unfortunate event that your insured does not want to buy the policy, another option is to sell it to a third party. This gives you a life settlement, which is usually about 75% of the policy's initial value. Once the third party buys the policy, it continues paying premiums until the coverage matures. Or in other words, once you pass away, at which point the third-party organization will start receiving benefits. Veterans benefits. If you have an elderly family member who is a U.S. military veteran, they can take advantage of Veterans Administration, or the VA, benefits to provide for assisted living. There are two kinds of VA benefits. The first one is Aid and Attendance Pension, which was developed for a veteran or surviving spouse who receives income below a stipulated amount. The other set of benefits are suited for veterans who suffer from service-related injuries or disabilities. Reverse mortgages. Seniors who live in homes who have full or majority ownership can leverage their properties to pay for personal care at an assisted living facility. The bank or financial institution that lends them money can pay the applicant in several ways: as a single lump sum amount, in monthly installments, or lines of credit. The good thing about reverse mortgages is that the borrower does not have to make any monthly payments. Instead, the lender receives payments obtained from their home's equity. This continues until the borrower ceases using their home as their primary residence. At this point, the property is sold and the lender receives payment plus accrued interest. Bridge loans. If an unexpected cost relating to assisted living crops up, applying for a bridge loan is the best option. This is a short-term loan that can be used to cover assisted living costs as you wait for longer-term solutions, such as earnings from a home sale or veterans benefits. Due to the nature of these loans, senior residents can obtain these loans in as little as a day. However, the borrower has to repay the loan within a year or less. Medicaid. Seniors who neither have savings, financial assets, or high incomes should seek government aid to pay for assisted living costs. One way to get this financial aid is to apply for Medicaid. This is a medical care program operated by the federal government in conjunction with state governments. Oregon State's Medicaid is known as Oregon Health Plan. Keep in mind that not all assisted living facilities will accept Medicaid, and in some senior care homes, only a few beds are set aside for Medicaid-approved seniors. Pooling family resources. If you find that you cannot pay for your loved one's stay at a memory care facility or other senior care home, you might want to seek help of close friends and relatives. Chances are they'll be more than willing to support you in some sort of way. For instance, if you're available to assist your parents with daily activities and the others are not, they can provide monetary support. Or if an elderly couple is living in a home that they are not yet ready to sell, their kids can offer to pay for assisted living and receive a reimbursement when the house is sold in the future. Renting your own home. Sometimes it's not easy to let go of a home. The idea of putting your house up for sale can be difficult. If you're not living in your own residence but don't want to let it go just yet, you should consider renting it out. This way, you retain ownership and receive rental income, which you can use to pay for your stay at an assisted living facility. Annuity. If you have savings or income but are scared of overspending your resources, an annuity is a good idea. You buy an annuity by paying a large sum of money up front. You then receive periodic payments over a given period of time. An annuity ensures that you always have money for sustenance, like hiring an in-home caregiver or paying for elderly care services. Social Security benefits. Social Security is the retirement income that seniors pay into during their working years by nearly all who work legally in the U.S. Social Security benefits are paid directly to the elderly, who are then free to use the income to pay for in-home care, residential senior care, or adult daycare, or for any other reason they choose. Assisted living credits. These are funds extended to seniors specifically to cover assisted living costs. There are two types of lines of credit. Home equity line of credit. This is a loan that works in almost the same way as a credit card. The main difference is that a home equity line of credit has significantly lower interest rates. Applicants are allowed to withdraw a certain amount of money on an as-needed basis. However, they must put their home up as collateral. There are two main parts of this type of a loan. First, there's a draw period, where the borrower is allowed to withdraw money. This is followed by a repayment period. Most lenders set the draw period as 5 to 10 years and the repayment period for 10 to 20 years. Signature line of credit. With this line of credit, you don't have to use the home as collateral. Also, it doesn't require specific withdrawal and repayment periods. Ideally, you'll be able to access this loan at any time. To qualify for a signature line of credit, lenders focus on the applicant's credit history. So if you have a bad credit rating, you'll have to consider other financing options. Private pay. Savings are the easiest way to finance your assisted living. You don't have to rely on the government, charitable organizations, or your family. As long as you have enough money in savings, you'll be able to pay for your living expenses. Part-time work. More and more seniors are choosing to continue working after retirement. If you're considering going back to work, you're not alone. That said, you should not engage in strenuous activities, since doing so can jeopardize your health. The ideal part-time positions for seniors are consultants, virtual assistants, customer service representatives, and tutoring. If you add your part-time income to your pension, you should have more than enough to pay for assisted living. Look for nonprofit resources for assisted living. With proper research, you're likely to find a nonprofit organization willing to pay for assisted living. And if they can't offer any help, they might direct you to someone or an organization that can. Look up these two companies. Area Agency for Aging. This firm links the elderly to relevant programs like Elder Refugee, elder abuse programs, adult daycare services, and more. You can also check eldercare.gov, which helps you find help in your local area. In conclusion, assisted living expenses can quickly deplete all the wealth that an individual has accumulated over a lifetime. By planning ahead and following proper guidelines, you can assure yourself the type of lifestyle that you so richly deserve.